Hey YouTube, hey future traders. I want to go over my website to give you guys a clear picture on how I use my website and why you should actually bookmark this page, go to metrofxtraders.com and bookmark this page and use it as a reference and a tool for yourself as well, because there's a lot of reference material and tools that is on the site that you guys could use on a daily basis. Now, before I get into it, let me go ahead and encourage all those that are watching this video to subscribe to the channel, hit the bell button, get notifications of future videos when I upload them on the channel. So my site, I designed it in such a fashion for me to use on a regular basis. Okay, so I was thinking about, okay, what tools do I need to attack the market, to get started, to learn how to trade and things of that nature. So everything that is on this site is for not only a beginner, but for an intermediate type of trader or somebody who's maybe even advanced, because there's a lot of tools on here that you guys could utilize on a regular basis. So now, if you don't already have a demo account, there's 3 recommendations of brokers on here that you can actually click on to create a demo account. And then once you're skilled and able to take it to the next level, then you want to create a live account where you're actually trading real funds. With a demo account, you're trading paper money. With a live account, you are trading with real money. Okay, now you guys seen this site, and on this site is my affiliate site, where there are opportunities on here to create multiple streams of income. And when you make an income from any one of these income streams, you just grab the money that you make from the affiliate site and chop it up in 3 different ways. Of course, the first way is to get traffic to this particular website with a lead capture page. The second way is to use that money to trade with. Okay, and then the third way is to, save some of that money for an emergency. Okay, so there's 3 pillars. The first pillar is to get more traffic and advertise, use those dollars for advertising and get more traffic to this particular website. And that may require you to sign up for certain social media opportunities out there that exist, like Facebook, Instagram, things of that nature, so you can talk about the affiliate site that you create, because this site will be your site once you become a member and sign up with me. I'll help you create the same exact site with a share code, and then you'll be able to change out the links on this site, like these black links here, and make it your own. And then when somebody comes to the site and sign up through these affiliate products, you get a commission, okay, a referral bonus. And again, you're going to take that money and you're going to split it in 3 ways. The first way is the first pillar. Again, that's to get more advertising and traffic to the site. So you're going to spend some money there. The second way is to use that money to, grow it. So you're going to be your own bank. You're going to be like an investment advisor for yourself. You're going to fund a live account once you get the skill set, and then you'll trade that money and 10x that money to help you earn more money. And then the third way, of course, the third pillar, I always encourage people to take a third of that money and save it. Put it in an envelope, put it in a savings account, put it in a money market account. Just save it and let it compound and grow over time in case anything should happen where you need emergency funds. You'll have access to some additional funds, okay, to help you take care of that emergency. So no money should be coming out of your pocket. The only money that should be coming out of your pocket is your initial investment to get these affiliate products. Sign up as an affiliate yourself. That's your initial investment. And then once you get your referral links, you just start sharing out these different opportunities on your site as well. And then when you start receiving referral bonuses and commissions, that's when the magic happens. So definitely I'll have both of these links in the description area so you can take a tour of both the websites. This one is earnmoreworksless.com, and again, this one is metrofxtraders.com. Okay, so this is a short bio of myself, so you guys can watch that video. It's a really good bio. And then you scroll down on my site here, and I'm going to tell you how I use it. So let me jump right into it. the very first thing I do when I come to my site, okay, and again, bookmark it for yourself, is I go to my charting platform. Okay, I go to my charting platform, but I also look at the Forex calendar, and I also look at, okay, which pairs are the most active pairs. Okay, so these 3 links are most important. So before I click on this, I'll go to the Forex calendar. So I'll go straight here, and I take a look to see is any red folders on the calendar. Because when there's red folders on the calendar, like let's say right here on Tuesday, February 24th, this is last week information here. They normally update it every single week. So on Monday, of course, this will be updated. You probably could come back tomorrow and see more updates. Let me see if I click on more. Okay, so they did update it, and we'll start with there's Sunday, is Monday, and okay, so you start seeing red folders on Tuesday. Oh no, hold on. Okay, here after the 28th. Okay, here we go. So no major announcements coming out. These are just folders of announcements of different currencies, what's going on in their country, a lot of reports as far as, you know, predictions, actual numbers and things of that nature. So let's say on March 2nd. So right here, if you're trading AUD USD, you don't want to trade it because it's a red folder. At 4:10 p.m. avoid trading this pair. Okay, because this is a really important report that's coming out. Oh, actually, it says RBA Governor Bullock speaks. So this is someone who's speaking regarding their currency. So you can, you know, want to avoid, okay, trading that pair at that time, because once an announcement comes out like this, like a red folder announcement, there's a lot of volatility that's going to happen in that pair. It may spike up, it may spike down. So you really don't want to be in a pair during that time. Okay, so that's one of the things I look for on this calendar. It's like, okay, where are all the red folders? And you could probably break it down and do just red folder filters, like right here, and just unclick all of this stuff here and just give me the red folders, apply filter, and it should filter out, okay, the stuff that I'm looking for. I guess I gotta learn how to use a filter. Hold on, let me try that again. Where is it? Okay, filter, expected impact. Okay, well, I clicked it. I guess there's a glitch in their system. Okay, let's see. Okay, so it does filter out, okay, the currency pair that you're looking for. If you're trading this currency pair, now you know there are red folder announcements, what you want to avoid. And yeah, you can definitely put that on your calendar. So another thing, have a calendar on your desk, or if you're using a calendar online, make sure you make a note of when the red folders are happening, so you could avoid trading during the red folders. Okay, so going back to my site, I'm going to exit this, and that information is to help you with your trading, because once some news come out that's either positive or negative, you really don't want to trade that. You want to just take a look at the pair and maybe trade it 15 minutes after the announcement and see if it's going in an uptrend. If it's good news, it'll continue to go up. If it's bad news, like their GDP report, their tax report, their unemployment report, things of that nature, if it's going down, and the trend is going down, you might want to continue trading with the trend going down. So that is pretty much the Forex calendar. Okay, and you can find your most favorite pairs on that calendar as well. And next is most active pairs. So you, in case you wanted to find out, okay, which pair is very active, okay, so you can compare the two pairs from an active pair to an inactive pair, and then let's say, okay, I want to trade CHF and GBP. So I'm going to take a look at those two pairs and see, what's going on. If this is a weighted pair and its percentage is higher, that means people are buying this pair and it's actually going up. And this is a pair that's going down. So, you can cross-reference yourself and, trade those pairs. You can look at CAD, USD. You can look at NZD, JPY. So you want to look at the most active pairs here against the least active pairs, and analyze the chart based on before you place a trade. Okay, and it also gives you like a little picture of what's going on with different pairs to see, okay, is it a downtrend, is it an uptrend, are you seeing slopes of going down, or are you seeing slopes of going up, things of that nature. Green is up, red is down. So you can take a glimpse of each one of these pairs before you actually chart up your charts and see, okay, maybe I want to look at this pair. So you want to find one or two pairs that you like to trade. I like to trade GBP USD, EUR USD. These are currency pairs in Europe, okay, and British pairs, things of that nature. Sometimes I trade Bitcoin, right here, BTC USD, okay, but I also trade the indices as well, NAS, and also I trade the metals, gold. All right, so this is just to let you know that, okay, which pairs are most active. You can look at the numbers and see as far as their price, their changes, what's going on, so on and so forth. This will give you a glimpse of what's going on in the market. So I take a look at this before I chart up my charts. So going back to the site, so you have the most active pairs there, a really good tool there. And then the charting platform. Okay, click on the charting platform. These are the different prices. If you want to upgrade your charting platform, you can sign up for free, of course. Just you could do monthly, you could do annually. I did annually just to get the cost out of the way. And then you go to products up here, and then you'll have access to screeners. You can screen certain currencies as well. So this is a really good tool. But the supercharge is where you want to go. So once this pops on your screen here, you can start charting up your chart. This is what I was doing, some charting on gold. So this is what I was doing earlier. So I'm going to erase everything. And then once you get on trading view, okay, you have a left panel and you have a right panel. The left panels are all your tools. So when you click on these little arrows, it'll give you a drop down to let you know, okay, here are some of the tools you could use. And then you could star them, like the fib retracement. I star it. I use this tool a lot. Trend-based fib extension. I star that because I use that a lot. Okay. And a fib is basically, a Fibonacci fib is just something that you would use to locate whether or not the retracement will come down to a certain level on the fib, and if it does coincide with a fair value gap, you might want to zero in on that particular level. So if you take the fib, let's say this is gold, right? This is basically, we'll go to the daily time frame, because gold was ripping last week, which is really awesome because that blue candle right there shot up all day on Friday, which was phenomenal. I did I did get some wins out of that, which is really nice on my trading. You guys already know I'm actually trading a couple challenges. I did fail a challenge, yes, it happens, and now I have 2 challenges left that I'm actually trying to pass, and I got another one. I signed up for another challenge today as well because they sent me an email saying it was a 2-year anniversary. Use this discount code, so I took advantage of that, which is a really good percentage off the actual challenge itself. Now, if you guys are not familiar with challenges, there's a lot of funding companies out there that will allow you to trade their money, but you got to prove yourself through a funded challenge. So by proving yourself, that's when they actually give you an actual account to trade with, and then you split the money with the funded company. It's a great way to not use your own money, to really blow in the market unless you're skilled. Okay, because if you can prove yourself with a funded challenge and pass it, now they usually give you 2 phases to pass. Phase 1, you got to get a certain amount of in profits, and then once you pass phase 1, they give you the green light to go to phase 2. Once you go to pass phase 2, they'll give you an actual live funded account, and then that's when they do the actual profit split with you. Normally it's 80, you keep 80% of the profits, and then they keep 20% of the profits. So you're in essence working with and for them, but you're actually making money for yourself, and then they just split the profits with you. And these are real funds which will be down, that you can actually have it deposited into a live account of yours, and then you can go forth and use that money to do whatever you want with. But again, if you stick to my strategy of, with the funding challenges, you want to always have more than one. I have 3 funded challenges. Each one of my funded challenges is designed to accomplish a goal. The first funded challenge, once I pass it, is to handle the household bills. Okay, so once that is passed and I actually get a funded account, I'll grow that account and then make enough money to pay off all the household bills. I'm talking the electric, I'm talking the car, insurance for the car, cell phone bills, rent, things of that nature. Anything that has a bill stamped on it, I'm trading that account to take care of all those bills. All right, and then grow that account so that way I'm living bill free, right? So that's the goal for the first one. The second challenge is for, the future me, meaning I have goals for a brand new house, a brand new car, upgrade my wardrobe. So that account, once passed, would fund my lifestyle. Okay, I'm talking trips, I'm talking private jet, I'm talking maid, I'm talking chef, all that would make my life a lot better is why I'm actually trying to pass that second account and grow it to a certain amount that I won't even have to worry about, bills ever again, and live the lifestyle that I want. So that's a lifestyle account. And then the third account, is for philanthropy, to give back. Okay, give back to charitable contributions, give back to friends and family, pay off my family's mortgages, build a home for someone in my household, so they can live debt free, retire a loved one, send a nephew or 2 to their college of choice, things of that nature. So the third account is to build that legacy. Okay, to build that legacy, that dynasty, that will grow to a point where it has its own trust, and then the trust pretty much takes care of everything. Okay, so that's my strategy. Hopefully you could relate or you could create your own strategy based on taking action towards becoming a funded trader. But everybody's different. You might have different goals, you might have different dreams, but I just want to share that with you to let you know. Okay, so the chart. Now the real work starts, right? After understanding what are your favorite, what pairs are active, understanding red folders and please avoid the red folders. Okay, because I made a horrible mistake. I was like maybe $300 from passing a funded account, and I forgot to click the button to trade the news. And when the market opened exactly at 8:30, and I was trading that account from 3 a.m. all the way to 8:30. But when the market opened, some news came out on that pair that I was trading, and they said I violated their rules. See, these funded companies do have rules, and once you violate the rules, they close down your challenge, and then you got to start over. And I couldn't believe it. I was like, no. I was upset at myself because I didn't click the button that says I wish to trade the news, which is an extra $25 on top of the cost to own the funded challenge. So I tell you right now, I'll never make that mistake again. So I always add the news I click the button and make sure it's always inside of the funded challenge so that doesn't happen to me again. Okay, so the chart, basically top-down analysis. You guys already know the drill. I do a top-down analysis. I look to see what's going on in the market. I mark up my chart, and then I do all my preparation before the market opens. Now gold, the best time to trade gold is the New York session from 9:30 to about 11. I normally trade from 9:30 to 11, and I'm looking at a couple things. I'm looking at the indices, which is NAS 100. Okay, NAS 100. I'm also looking at gold, and I'm also looking at my other favorite pairs like EU USD, GBP USD, NZD USD, and Bitcoin. So these are the pairs that I normally trade. Okay, but we're on gold right now, and you can create on the right panel. You can create a your favorite list and put all your pairs there. By doing a search, you can just type in whatever pair you want to trade. Let's say GBP, GPY, USD, which is a Japanese yen. Okay, and you just find it on the list here, and you can click this plus button on the right. Okay, and add it as a favorite. Okay, if you don't see the brokered over here, you can put USD JPY, USD JPY, and then you see the brokers right here. So typically, let's see if it's here. Think Markets is who I used. I actually got my trading challenge with Think Markets, so I would click that plus button right there, and then it populates it right on your favorite list. And now when you click on it, it'll give you the chart of that pair. Okay, and this is the pair, and then you can do your analysis on that. Okay, so you got your left panel, you got your favorite tools. Okay, you could take a look at my favorites like horizontal line. This is just a line, it creates a line for you. Okay, with the lines you would create your support and resistance levels, things of that nature. Okay. Alright, let me go back to gold because I want to do a quick breakdown for gold for next week. Okay, so top-down analysis, you can go as high as you want. Let's start with the monthly. So we're coming upon a new month, but February, can you believe it's already over? Yeah, no, it went quick. All right, so this is the monthly. So as you can see, in the month of February, which is this month right here, gold started down and then dipped a little bit, but then went up. Okay, and it was a really uptrend market for gold for the month of February. Okay, so with this, I take a look at the overall trend, and I notice that everything's sloping upwards, which means it's an uptrend, right? So you usually start from down here and you slope it upwards. Okay, this is your trend line. Your trend line is your friend. So the trend line is the very first thing you see here. It's already started. It's on my favorites. So that's a trend line. Okay, you can do more than one trend line because it looks like it sloped more a little bit, like right here, because it pulled away this trend line and it created this upward trend line right there. So this is an uptrend. Okay, pretty much try to connect a couple of wicks to the trend line, and you notice it kept bouncing off the trend line and kept going higher. So right there lets you know that it's an uptrend. So now I'm going to go down to the weekly and get a close-up of what's going on, and then adjust my trend line so that the wicks touch it a little bit. See, this wick touches it, this wick, a couple of wicks has to touch the trend line. I get 2 or 3, but you saw that there was a couple of retracements. Okay, meaning it pulled back to touch the line, bounced off the line, and continued to go higher. That's another confirmation that you're in an uptrend. Okay, so the last week the candle was solid blue, which is an uptrend, meaning it kept going up. The candle before it kept going up. So we had 1, 2, 3, 4 weeks of positive growth, which is nice. Okay, and then from here, what I'm looking for is to see if there's any changes in the candles, because as you can see, there's 1, 2, 3 upward candles. So each candle was higher than the previous candle, which is good. Okay, and then you go down to the daily. Now the dailies, I'm actually marking up the last candle for next week's opportunities. So I would pretty much take the horizontal ray, mark the high of the candle, change the color to about orange. Okay, I'm opening this up because I want to get the peak, the highest point of the market, and then I'm also marking up the close of the candle, which is right there for that day. And then I'm marking the wick where it pulled back on the low part of the candle. So this whole area I'm going to be taking a closer look at, focusing on this area to see if the market's going to, go above. Right, let me show you. So if the market opens up here, is it going to go above this area, come back and touch it, and go higher? That's one scenario. Okay, so I'm going to pay attention to that. And is the market going to open here, go low, bounce off this area, and go lower? Okay, because when the market's this high, typically there's going to be a lot of people at the top who want to profit and just start selling what they already have so they can make money. So if it turns in from a buyer's market to a seller's market, then you go see a black candle sloping down. So that may happen. Okay, another scenario would be candle opens, goes all the way down here, hits the bottom, and then goes back up and does do one of these numbers. Okay, so that's one scenario. Then another scenario, there's so many different scenarios. That's why we're in the market of trying to predict it. Okay, with some sort of skill set, right? And that skill set requires multiple times where you have to come on the charts and mark out different scenarios. You have to back test. You have to write your trading plan. You have to create little pictures like this and make notes on that. If the market does this, I'm going to do this. If the market does this, I'm going to do that. So you have to have your scenarios in place. So in my mind's eye, I'm thinking, okay, if all these scenarios happen, I might want to place a sell trade right here and then go down. Okay. So, but there's got to be a market truck structure shift with pullbacks and things of that nature. So I wanted to show you that Fibonacci tool, because the Fib says if you take it from the bottom of the lowest candle and you stretch it all the way to the top, you have these areas where the market can pull back to. Okay, the sweet spot would be 78.6, 61.8, and then 50%. So if the market opens, right, pulls back to one of these areas, there's a 50-50 chance that it will bounce off one of those areas and continue its journey higher. Okay, so there's a 50-50 chance that it might go there and go higher. Okay, now it's a 50-50 chance that the market might go to 50% and go higher. Okay, so that's why you mark up with the Fibonacci, right? Now what you're looking for, that if it does hit any one of those levels, I'll take that. If it hits any one of those levels, the only candle that you need to pay attention to would be, let's say, okay, it's here, right? And then you wait for that candle to close, and then this candle is bigger than that candle. This would be a bullish engulfing candle. Okay, then you would want to consider placing a trade once you see this setup. Okay, so it could happen at any pivot point. Okay, it could happen on the 61.8. Okay, well, you have a bullish engulfing. Okay, and it may happen at 50%. So that's why you got to pay close attention to the market on the active session, trading session. So again, mine is 9:30 to 11 o'clock. So if this happens at any point in time, I would consider placing a buy with certain confluences, of course. Typically a couple more things I need to see before I take the trade. But if there's a bullish engulfing candle, there's a good possibility the market will continue to go higher. Okay, so keep that in mind. All right, so let's delete that. Okay, but I'm not done marking up the chart because I'm going down to the lower time frames now. I'm going down to the 4 hour. Now in the 4 hour, I'm looking for gaps. I'm looking for gaps in the market. Write that down, gaps in the market. What is a gap? Well, it's called a fair value gap. That's a point on the left side of the market where orders were not filled because the market was actually trending higher with a certain speed, right? So a lot of orders were placed, but the market couldn't fulfill all those orders, so they had to leave them behind. And I'm looking for 3 candles, and with a middle candle, the first and the third candle, though, if the wicks are not touching, I consider that a gap. So this is a gap. Okay, but as you can see, with this particular gap, the market has to come back and fill the gap, which it did right there, to trend higher. And that's exactly what it did, right? It came back, touched the gap, filled it, and went higher. Okay, and let me show you the tool again, the Fibonacci tool. So if we took the bottom of either this candle, it's always going to be on the last down candle. So if we put the Fibonacci on the bottom candle and we stretch it all the way up to the top, we notice that the market bounced off the 50% mark. Okay, almost came down to the 61.8%, but typically it's like the 50% mark was the sweet spot. And remember I said look for a bullish engulfing candle? Here it is right here. This candle is bigger than the previous candle, so that makes it a bullish engulfing candle. Okay, so in actuality, if you're looking at the market, right, and you saw this, you saw, okay, there's a bullish engulfing candle happening on the 4 hour time frame, you could have waited for this candle to close, place an order on the next candle, put your stop loss below, right, put your stop loss below, like right here. Okay, that's your stop loss. Then you would stretch this out based on this other tool right here called the long position. You entered here, your stop loss is here, and you stretch this out. I normally stretch it out for 1-to-1. Your win ratio will be a lot higher when you do a 1-to-1. Okay, so at this particular point, you know, it's going sideways, but it never came down to hit your stop loss. But then it started to bounce off and go higher, and then right here is where it hit your take profit, and you would have had a winning trade right there. That's why we use this tool. Okay, now some people say, well, you could have held it for a little longer and it would have been like a 1.551, whatever the case is, but 1-to-1 is good enough. Okay, So that's how you use the Fibonacci tool. Okay, and everything that I told you that I plan out, it's what happened at that particular point in time with the bullish engulfing candle. Okay, and that's what you got to get good at. That's what you got to practice. Okay, so get excited about that. Just rewind the tape, take notes on what I just said. So I'm looking for gaps. One gap has already been filled. Is there any more gaps between here? Now, there's no gaps when two wicks are touching each other. So, there's no gaps, except for right here. There is a gap right here. This candle and this candle's wick did not touch, but you have a middle candle in the middle there. And I would stretch that out. Okay, because now that there's a gap, the market has to eventually come back down again, fill the gap because it left a lot of orders behind, and hopefully will trend higher, but it could run through the gap and trend lower as well, because you would have a market structure shift if the market goes below this last black candle. So if the market goes below this candle and does this and goes through the fair value gap and through the last candle, you would have a market structure shift. Okay. All right. So keep that in mind. But right now the market is bullish. So you can anticipate it going back here, filling a gap, hopefully bouncing off of the bullish engulfing candle to continue its trend higher. Okay. All right. So we know where the gaps are now, right? You can leave this line here to remind you that if the market goes below this red line, you would have a market structure shift where the market's no longer going up. It may eventually trend lower, hence creating a downtrend. So now we're going to the 1 hour. We're taking a closer look to see what's going on. Is there any additional gaps within the 1 hour? And the answer is yes. There's one's right here. Let's stretch that out. So the market has a couple of pit stops before it continues to trend higher. So 1, 2, 3. This candle and this candle's wick is not touching. So there's another gap right there. Okay. And this is on the hourly time frame. Now, to help you find these gaps, there is an indicator that you can put on your chart called the Fair Value Gap Indicator by Luxalgo. Okay, 19.5 thousand people are using this tool. So you click it, and it shows you and plots out where the gaps are. Okay, I got everything in there but one. All right, and that's why that tool is helpful. All right, there's another one right here. So that's basically saying that if the market has come back and filled some of these orders, it may bounce off at any one of these points here, right, and go higher. So then again, you got your Fibonacci tool, you pull it out, lowest black candle to the top, and you see your levels here. Okay. All right, you see your levels here. Sometimes it aligns with your levels, the gaps, sometimes it doesn't. Okay, now down to the 15-minute time frame, because I'm looking to now possibly get into the trade. I know it's a bullish market. I know the trend is slope upward. My goal now is try to get into the market on a pullback. Okay, because the rule of thumb is you buy low, sell high. So when the market pulls back and it gives you indication that it's going to pull back up, that's when you would consider getting into the market. Okay, and every time frame will have its own fair value gaps, so keep that in mind as well. But the higher time frame is where you really want to place your fair value gaps. Okay, and pay close attention to those gaps on a higher time frame. Okay, and make sure each time frame is aligned with the higher time frame. So if the higher time frame, let's say the 4 hour is bullish and the 1 hour is bullish, and then the 15-minute was bearish, you don't want to, trade a bearish market. You want to wait for it to go and change back to a bullish market. okay, an upward trend. All right, so I could put another gap, fair value gap here, and you can label it. I've already labeled it. You can create a label, your templates, save your template, and FVG, fair value gap. Okay, this is a reminder that, okay, this area is a fair value gap. All right. Okay, now we're going down to the 5 minute. Okay, and the 5 minute, as you can see, there was a gap on the 5 minute right here, a fair value gap, which it came back down and touched it, right? It did fill the gap, right? And then the wick is pulling up, so the buyers are pulling. It's still a buyer's market because the buyers are pushing the market up. When you see a long wick on the bottom, the buyers are pushing it to go higher. A lot of demand, a lot of people asking, I want to get in, so they're pushing it, and the market makers making money every step of the way. Okay, but never chase the market. So if it's at a lot high, you want to make sure it pulls back with a black candle to get in. You only get in on pullbacks. You never get in on, the highs of the market. Never chase it, because you may get in on the high and then it starts to pull back, and now you're in drawdown, and now your account's negative. And another thing, you don't lose money until you sell and close out your order. So if you're in a buy trade, close out your order, and you're in a profit, you made money. But if you just see numbers and it turns from red to black or blue, and you didn't sell it, it's just fluctuating. That's all it is. You didn't lose any money, you didn't make any money. It's not comfortable to see red all the time. You might say, I need to close out this trade. But if you set your stop losses, you don't have to close out the trade. Let it hit your stop loss. If you set take profit levels, let it hit your take profit. Once you set your levels, okay, you set it and forget it. All right, that's important. All right, and make sure you truly understand how to manage your risk. Trade only 1%, 2%, no more than that. Trade maybe 3 to 5 times during a trading session, no more than that. Okay, write down on paper, no over trading, placing multiple trades, and I'm learning that myself. I place too many trades sometimes. No multiple trades, and no revenge trading. Okay, my last video, you guys saw that I revenge traded, and I was like, oh, I just violated my own rule. But no revenge trading. If you lose, that's it. That's your third trade for the day. Close out everything, walk away, come back 15 minutes later, analyze what you did wrong, and then try not to repeat your mistake. Okay, that's all about psychology. What goes between your two ears, the thought process you have, is really, really important. Do not overtrade. Don't say to yourself, I need to place multiple trades to get this money back. Do not revenge trade. I need to make another trade to get back my money. I just lost, I don't know, $100, $50, $25. Let me try to get that back. Don't do that. Because once you go in with that type of feeling or attitude, the market will take you to lunch. And all of a sudden you have your account's lower than it should have been, when you just could have stopped, reset, reevaluate, and start over. I've done that countless of times, and I tell you, it has never benefited me in the long run to overtrade and to revenge trade. So try to stay away from that. All right, so now 5 minute. Now if the market was open, I would look for this, and I'll try to get in right here because it started to pull up. Okay, or I would wait for one of these green areas to be, touched by a candle or two, because we've already noticed that there's a couple of, fair value gaps here. This is all green, so there's a lot of pullbacks, a lot of areas where the market needs to come back to fulfill a lot of orders that it left behind. Okay, and again, if you put your trend line on here, we're still bullish. All right, so always go with the trend. Trade with the trend, because the trend is your friend. Do not counter trade, because if you counter trade and you start trading against the trend, it doesn't benefit you at not one iota, because you don't know when it's going to start reversing, go back in your direction. That's something I had to teach myself. Okay, so yeah, that's pretty much my analysis of the market. And then if you want to go down to the 1 minute, which I really don't advise, but you know, you can find some good entries on the 1 minute, and if you can find a good entry in the 1 minute, that's pretty good, because you can get in on the 1 minute and then set your TP on the 1 hour or the 4 hour, okay, and then hold the trade for an hour to see if it'll go to your TP, you take profit, okay, because you got it in the 1 minute and you made a projection for it to go higher. So now where would that projection be? Okay, and then you say, well, I want it to go a couple of pips above my entry, 20 pips, 30 pips. There's a strategy called the 10 pip strategy, that all you shoot for is 10 pips a day for profit. There's a 20 pip a day, 50 pip a day, and 100 pip a day strategy. Okay, so it all depends on your strategy. All right, and that is the conclusion of this video. I think I provided a lot of value, overview of what I do on a daily basis. Again, it starts with my website, it starts with the calendar, it starts with the most active pairs, it starts with analyzing your pairs, it starts with avoiding red folders, it starts with getting a demo account, it starts with eventually you trying to pass the challenge, and then the money you make from the challenge, of course, you allocate it towards the 3 pillars okay, of what your goals and dreams are, and then you rinse and repeat. Okay, because right now I did the math. I have a couple of funded challenges that I'm trying to pass. I have 2 $25,000 funded accounts. Okay, so that's $50,000 right there, and then a $15,000 funded account, whereby some of these funding companies will allow you to bypass the challenges and go straight to a funded account. When you do that, though, make sure you have the skills for that, because if you hit a certain number below the threshold of a drawdown, like you can't lose, I have this like $15,000 account, I can't lose no more than $900. If I lose $900, the account is closed. But if I can grow it from 15K to 20K, 30K, if I can grow the account over $450 more, right? Because you got to make $450 to request a payout. Once you get to that threshold of $450, you can request a payout. But I wouldn't request a payout at that point. Continue to grow that account. Continue to be your own bank. Because once you get to a certain number and you say, okay, I want to withdraw, let's say $3,000. When you get to that point and you grew the account to $3,000, there's a profit split of 60-40. Okay. If you want to know what funded company will pay you 60%, get with me, leave a comment, and I'll share that funded company with you, where you bypass the challenge and you go straight to a funded account. I've actually got paid out twice from that funded challenge account with that company, and yeah, I hit my bank account and everything. I was able to grow the account, request a payout, 2 payouts, and yeah, it's really legit. So I was really impressed with that. But it goes to show me that my trading plan works when I work the trading plan. If I go against my trading plan, that's when I fail. So it's really important that you write down your trading plan. You have parameters. You have what you're going to do, what you're not going to do. But if you make a mistake, you go back and reevaluate. Okay? So with that being said, y'all, thank you so much for watching the video. If you have any questions or concerns, you can always reach out to me. Now, if you're new to trading and you want to get your feet wet and you just don't know where to or how to start, I would definitely come back to my website, to metrofxtraders.com. Click on the recommended Forex Academy and get you start learning right? Start learning, start going to class, start taking notes, start watching recorded videos, start going to the lectures, watch other traders trade, start building friendships, so on and so forth. So the academy is here, and when you do that, I will mentor you absolutely no cost. Okay, I'll hold your hand through the whole process. I'll help you get started. We'll jump on a Zoom call and we'll get everything set up. That way you're off to the races. Okay, so dream big, write down your goals, because I say this always. Your goals are your stepping stone towards getting your dreams. You have to have goals in place, and then you check off the steps within the goals, and once you do that, your dreams start to materialize, and you'll drive your dream car, you live in your dream home, you start helping a loved one. Good things happen when you hit your goals. Okay, so but remember, there's no guarantee of success, and trading does involve a risk. There's a lot of risk involved. Make sure you do not trade money that you're paying your rent with, paying your groceries with. You don't do that. That's a no-no. Okay, when you're doing that, you're gambling. You don't want to gamble. You want to be a professional, a skilled professional who knows what to do and what not to do. Okay, you wouldn't go to a nose and ear throat doctor to help or to do an operation on your foot. You wouldn't do that. You go to a professional who's skilled at a certain body part, and then you ask that professional to do what they need to do to fix it, right? Just like on a mechanic. You go, your car's broke down, okay? You don't go to a dentist and ask them to fix your car. You go to a mechanic and say, okay, my car's broken. You have the skills. You have the tools. Go ahead and fix it. And that's the type of person you need to be. You need to be that person for yourself. A fixer of getting out of debt. A fixer of dreaming big dreams. A fixer. By becoming a fixer, okay, a Forex trader, a professional, once that is in place and you practice, study, implement what you've learned, and you start becoming a master trader, great things happen for you and for your family. It's a journey, and I'm on that journey with you. Okay, I'm not there yet, but great things happen to people that never give up. Okay, failure is temporary. Okay, failure is just something that teaches you what not to do, but you don't walk away, because walking away is when you truly fail. But if you continue to grind, if you continue to study, if you continue to implement, and you do what you're taught, you will experience success. So with that being said, y'all, thank you so much for watching. You guys have a successful week next week, and I'll be back on here Saturday. I might be doing more of these trainings more often than not, since I am a full-time trader. So I'll talk with you all soon. Thanks for watching. Share the video, give it a like or a thumbs up. That way it helps out getting this message out to everybody that's looking to trade as well. And explore in the website. There's a lot of good stuff here. You need a notebook? Here, click that button. Recommended books? I got some books for you. Okay, join my Facebook group, join the YouTube channel, subscribe, start a retirement plan. There's a bunch of stuff here. Here's my bio written out. You guys can go to the website, read that, and click here for the affiliate income opportunities. And here's a disclaimer. There's a free book I'm giving away. So if you guys don't have a copy of this, click that button. I'll send you a copy of it. Okay. And then I'm going to upload the video that you're watching here onto the right there. I'm going to put it right there, so you guys can come back to the site and rewatch this video. Okay. All right, y'all. Thanks so much again. You guys are awesome. I appreciate your subscription, and I look forward to building friends with you guys along the way. Join my community. Take care. Bye for now.